Hi, everyone. This is DeFi Dad. You're watching episode 49 of Yield TV. Hey, so welcome back. It is Tuesday, December 15th, 2020. Today, we've got back-to-back interviews with a bunch of really leading thinkers in DeFi and builders in DeFi. So I'm excited. We're going to actually kick off today with Nate Hindman, who's the head of growth at Bancor. Nate has actually been, I think, at the forefront of trying to educate us all on what are single-sided liquidity provisions, which is an innovation from Bancor. It's actually now available on Zapper as well. So if you find this compelling and you want exposure to single-sided LPs, we're going to walk you through how that works today. But Nate, anyways, welcome to Yield TV. How are you doing?
I'm good. I'm impressed with that intro you had there. Very It was great. It was great. I got me really pumped up.
Yeah, that video is it's funny. There's a bunch of those you can get from videos.com, I think is it. But yeah, I joke around. It makes us look a lot more professional than what we really are.
The DeFi is going for that like retro style, right? So
that's yeah, that 80s synthesizer music video like style. Yeah. I was actually just looking at Super Rare this morning, and there's a bunch of pieces of art, and it's got the Ethereum prism, and then it plays up that style, and I'm like, what am I doing? I'm like that guy who's just buying all of this art. It's all the same style. Like, I need to branch out.
I think we need to make a commitment to evolve the style. You can't just not everyone should do the retro thing, right? Or you need a new riff on it. You can't just the same exact thing over and over. So
yeah. And actually, it's interesting because it kind of relates back to your job. Like, maybe we could start there with what was your background before you started working at Bancor, and maybe tell us a little bit about the journey the last few years, because you've been with Bancor building through the bear market, and I think we're not in a bear market anymore. I think so, it's exciting times. But yeah, tell us about your journey getting into Bancor and DeFi.
Yeah, sure. So I've been with Bancor since early 2018. Really started playing in crypto in 2017. Before that, I actually started my career as a financial journalist. I was working at the Huffington Post in New York, and also freelancing with the Wall Street Journal, and so covering at the time a lot of equity crowdfunding stuff, which sort of connected the dots later down the line with crypto. Went back to school to learn how to code, joined a couple mobile internet startups out in Silicon Valley and San Francisco. And then in 2017, moved to Tel Aviv in Israel, and really started just messing around in crypto and in Ethereum specifically, and trading, and stumbled on Bancor because I was just converting some tokens, and I remember poking around the site looking for the order book and couldn't find any order books, and was, what the hell is going on here? What's behind the scenes? And that's when I stumbled on automated market makers and liquidity pools, and just went down the rabbit hole from there. I was just really obsessed with this sort of primitive since early 2018, and it's been a wild ride since then.
Dude, it's awesome. Yeah, I definitely, I think we all have something to share, just being in the space the last few years. It's been I never envisioned that we would see all this excitement so soon. I kind of just got used to okay, I guess we just continue to build, and at some point the excitement will return. But is that a decade away? And now it feels like even mainstream media is starting to pick up on everything that's happening on Ethereum. I know I saw on CNBC the other day, someone mentioned that there was going to be $1 trillion in transactions settled on Ethereum. And I'm like, whoa, that's someone who's, sophisticated enough to recognize how significant that is, that we're not just talking about prices and, praying that numbers continue to go up on tokens. That's someone who really understands the grand scope of Ethereum.
Yeah, I mean, I don't know. The past few years have just been like, it's hard to even, put it in words, the ups and downs and the manic, but like the past, I'd say 6 months, just like the stars have really felt like they're starting to align. And I think the most recent, I guess, bull-esque run is, it really feels like, there's a lot of smart money and a lot of institutions piling in. And yeah, it's been fun to educate a lot of them on DeFi. It's like these, MIT, Goldman Sachs, PhD algorithmic traders that, spent years on Wall Street. To be able to educate anyone like that on anything is fun. So really getting
They get it. They get it. I think like this was the vision of crypto all along is, it's an alternative finance ecosystem, something beyond what we all loved about Bitcoin being a store of value and a transfer of value. And it's what are we doing? We're re-architecting what is finance, but it's in a peer-to-peer fashion. And we're all, obviously the goal is pushing towards like truly censorship resistant systems. And that's cool because there are so many people in the world who just don't have access to this. Like I think being in Israel, being in the United States, like we know we're pretty fortunate. We have access to a lot of resources. But when you think about, I just talked with someone yesterday from Argentina again, and it's just a standard there that everyone is, trying to dump the peso and get into DAI or get into some other like fiat currency other than DAI. So it's exciting times.
Even in Israel, something as an American I just never realized. You come to Israel and my friends want to like easily purchase stocks, and it's like even here, like relatively wealthy people, there's not seamless access to financial markets and in the U.S. So yeah, it's definitely a bubble you live in when you live right in the U.S. and expand beyond that, and also a sort of like socioeconomic bubble too.
Nate, why don't you walk us briefly through what is Bancor in case someone's new to Bancor? Maybe like what did it start out as an AMM, and then where are you guys today? And then I think that'll lead us into single-sided LPs.
Yeah, so believe it or not, Bancor actually started as a community currency platform for long tail cryptocurrencies to get sort of instant liquidity in their token by creating these things called automated market makers, where you put your amount of token, and I'm sure you guys know another reserve asset in there, and it allows automated trading whereby anyone can provide liquidity to that pool and generate a fee from each swap that goes through the pool. So as long as your tokens in your wallet, they're just sitting there idle. You want to get yield, you may lend it out, you may do any type of action, and one of those types of actions is providing liquidity to a liquidity pool. And so Bancor was live in 2017 with the first automated market makers on Ethereum. And at the time, we built BNT, really is the connective tissue. Each pair in Bancor has BNT as its counterparty asset. And so, this proved an interesting dynamic when Uniswap came along, which Uniswap came in and effectively adopted Bancor's AMM model and pulled out BNT and put ETH in its place. And this actually, removed a lot of friction for users, where, in the sort of legacy world of AMMs before the single-sided LPs that we came out with in recent months, when you provide liquidity to a pool, you have to provide those two assets. So it made more sense. More people just had Ethereum in their wallets to provide as the counterparty asset, as opposed to having to provide BNT on the other side. Now, we realized in these past 3 or so years where we've seen AMMs totally explode, whereby they're processing more volume and centralized exchanges. They're the sort of key receptacle for yield farming. We found that there are some really key issues and flaws in them. And one of them is the fact that when you're providing liquidity, that you have to provide the other side. A lot of liquidity providers, at least the original promise of AMMs, is you want to hold on to your long position on your tokens. You just want to put your tokens in the AMM. Why do you have to put the other side up? That's really what Bancor single-sided liquidity provision is all about. And single-sided AMMs is if you're going to the link pool, you can just provide link. You don't have to put up the other asset, which in the case of Bancor is BNT. And so you get to maintain 100% exposure to the asset you're providing. And then this other key issue that we've identified that's come up and that the industry has really started to catch on to is this idea of impermanent loss. And that is an issue that if one of the tokens inside the liquidity pool moons or actually moves at all, the rebalancing that occurs by arbitrageurs in order to ensure that the prices offered by the pool match external markets, the rebalancing that occurs can actually lead to you losing a lot of money. You can end up, your principal value, when you pull it out, can end up being a lot less than what you came with. And the bet that you're making is that fees or yield farming rewards will be greater than the impermanent loss you suffer. But so often, especially when you're holding a token that moons, that we all hope our tokens will moon, that's not the case. You end up with more impermanent loss than the fees can account for, the yield farming rewards can account for. And there's really this uncertainty. I think most AMMLPs really live in fear, actually, that one day they're just going to open up their stake and it's going to be like, what? It's just worth way, way less. I think we've had that experience, at least if you've been messing around with AMMs for that long. So Bancor's new version not only offers single-sided liquidity provision and exposure, but also impermanent loss insurance, whereby you are fully protected against impermanent loss. And we can delve into how that works, but those are those really two key features that we've launched in the most recent version of V2.1 in the past month or so: single-sided liquidity provision and exposure, and also impermanent loss insurance.
I really like how you framed it as, normally when you provide liquidity, one way to say it is that you are holding a trading position, but you're holding two tokens. And that one of the interesting things to me about these single-sided LPs is that you're able to remain long on one token. And as long as you're willing to stick with it, at this point, the way the model works is you stay with it for 100 days, and then you have every day 1% more impermanent loss protection. By day 100, you're protected. You can withdraw before that if you want, but you're accruing more and more protection. And meanwhile, if you're doing that, you're holding an asset now that's earning trading fees through Bancor. So what I wanted to quickly show here is Croco.finance is a great way to visualize impermanent loss. I'm giving a simple example here where I have DPI, the DeFi Pulse Index, and Ether. Now, these are normally fairly correlated. They tend to go, I guess my video's backwards. They go up and down together just because the market tends to follow one another. But let's pretend that ETH skyrockets by, let's say, double the price of what DPI is. At this point, I started with my position here was, I think, around like $3,000. And then what you're seeing here is the impermanent loss here is if I'm down about $263. Now my total position is up, of course, quite a bit in this example, but there's other like worse examples of this. Like, what happens if you hold one token that goes down in price? You're feeling not, I'm saying double the pain, and not like you just multiply double the loss, but you get what I mean. Like it hurts that much more because the divergence in their prices is what's causing you impermanent loss. So the solution, or one solution that you guys have come up with, is that if we go to, I want to show this. I love this diagram you had in Bankless. So this this shows you that normally you would be adding into the green arrow. This is a token that I hold, and you would normally hold, let's say, Ether or some other token or multiple tokens. But in this case, the protocol Bancor is adding the Bancor token. And so I could go in and let's say I've got Link and I want to just remain long on Link, but I want to earn. I can basically deposit Link. And then again, every day, not only did I have to only deposit one token, you can deposit both if you want, but if you want to deposit just one, that's how this works. I'm earning 1% more protection. So by day 50, I'm 50% compensated. If I were to pull out and have some impermanent loss, I would be paid out. Nate, in this case, am I being paid out in BNT, or could it be a mix of the two? That's one thing I've never fully understood.
Yeah, so it's going to be a mix of the two. So the IL, the impermanent loss insurance, if the pool has enough of the token you provided in order to pay you back fully in that token, then it will. But if it doesn't, then it will use some BNT to pay you back and to compensate you for the impermanent loss that you suffered.
Excellent. Okay, so here is just really quickly. I'll walk through this, but Nate, chime in here. Let me know if I'm missing anything. So if you want to try a single-sided LP, we now support it. It's at zapper.fi/invest. So click on the invest tab, go here and search Bancor. There's hundreds of LPs, but this will show you the 35 LPs that we currently support. All are single-sided. We'll eventually support the traditional double-sided LPs, but for right now, I could go here and say, what token do I have? Now, the challenge right now is that this is still rather new, and they've been rolling out more and more protection. So it's not like you can just dump as much as you want in. But I would argue, having watched these pools, that if you pay attention to them, every few hours liquidity opens up and then people add more. So, if you really want to get into these, I think just paying close attention for a day or so, you can find space here. Oh yeah, go ahead.
Yeah, and just if I can explain why in certain cases there may not be space available for single-sided LPs. So effectively what's happening behind the scenes is, like you said, you come with your $100 worth of Link. Bancor is providing co-investing $100 worth of BNT, right? So it's effectively investing alongside LPs and also earning fees for the protocol on the BNT that is provided. But for each pool, we don't just want, a massive Link whale to come along and dump 20 million worth of Link on one side and have the protocol immediately put up 20 million worth of BNT. So in the early phases of V2.1, we have limits per pool on how much Bancor can co-invest on the other side. And currently it's for the pools, it's around $1 million worth of BNT can be co-invested on the other side. Now, what we've just launched this week is an ability for governance to adjust the insurance limits per pool. So we have a proposal out that's proposing that the ETH and the Link pools co-investing limits on the BNT side be increased to, I think, something like 10 million BNT. And so, so it's worth noting that there will be more space kind of opening up in these pools. It's also worth adding that you can still always provide dual-sided liquidity, right? And so what happens is when you provide BNT to the BNT side, it's effectively opening up more space for there to be single-sided, we call it TKN or ERC20 liquidity. So you can effectively do that, atomically by doing dual-sided liquidity. And what will happen is it'll open up that space immediately. So you'll be able to deposit on both sides, and both sides are then protected. So the BNT side that you provide and the Link or the ETH or whatever side you provide, is both of those sides are protected against impermanent loss.
So am I right to say, or am I understanding what you're saying as if I go to let's say Tether and I wanted to add liquidity to this pool, and I'm going to do it single-sided because that's all that's available here for now on Zapper. But
Yeah.
I go to Tether, I realize, there's no space available, but I already hold the Bancor token. If I click here, there's plenty of space available. This works the same way. Like, am I protected 1% more every day?
Exactly. Yep.
Cool. Very cool.
And actually a bigger incentive. So there's BNT liquidity mining rewards that we've just launched. And we wanted to create an incentive mechanism where there was more of an incentive to, because obviously the bottleneck here is the BNT coming into the other side of the pools, So what is also happening, and we didn't really cover this, but when, let's say I come with Link and the protocol co-invests 100 BNT, when I put BNT on the BNT side, it's actually burning and the BNT that was provided by the protocol and taking over the protocol's position. Does that make sense?
Nice. Yeah, absolutely. Yeah, makes sense.
And also very cool about that is if the protocol is generated fees off of the BNT that's provided, because again, the protocol's taking 50% position on the pool, so it should generate fees for that too. Then as the BNT is burned, it's not just the BNT that's being burned, but it's also the fees that are burned for BNT. So this acts as sort of a constant deflationary mechanism on the token. Does that make sense? I know that got a little.
It does. No, it does. Here, I'll just to wrap up on that, because I just learned something. I did not realize that you could do that. Okay, so if I'm on zapper.fi/invest, if you already track your portfolio, again, it's another convenience under the invest tab. And I go to one of these. If I am long Bancor token already, I mean, this isn't financial advice, but I'm just saying, if I'm long Bancor token, this is a no-brainer, because I can go in and I can earn with that Bancor token without experiencing impermanent loss. So I can toss in. You notice I select a side, single-sided LP. And if I were to add Tether here, that's been maxed out for now. There's more space coming based on what you were sharing. But if I go to the Bancor side, I've got plenty of room there. And that actually, am I understanding that enables more room for those who do hold Tether? Like the more that we replace of what Bancor, the protocol, paid, yeah. Okay, cool. And I'll link the Bankless article too that you wrote. It's really helpful, but honestly, like, it's just, if you don't like impermanent loss, if that's not, like, sometimes you can use it as a part of your strategy to accumulate a token. But if you just are holding a single token, or especially if I'm long Bancor, like, this is, to me, kind of a no-brainer. Like, why not just earn the trading fees on top of me just holding the token and believing that, I don't know, that it can go up in value over time.
And the last thing to add to that, and if you just want to go to bancor.network.
Absolutely.
The last thing to add to that is, since it improves the health of the protocol when BNT holders provide liquidity and take over the protocol's position, we've offered a greater incentive in terms of BNT liquidity mining rewards on the BNT side. So I think our site is, of course, a little on the day I come on here, it looks like it's being a little buggy right now. But
no. Yeah, it's working. By the way, yeah, my internet's been shit for days, so I want to clarify. I've had issues the last few days, probably a reflection of my internet, but no, it's all showing up here now.
So if you look at those rewards columns, you'll see that, okay, I can, if I provide BNT to that pool, to the ETH BNT pool, I'm going to get a higher APY on the rewards. Wow. And that's because the way the BNT liquidity mining rewards, they happen on a weekly basis. 70% of the rewards go to the BNT side, and 30% go to the token side, so the ETH side or the Link side. So It's an even greater incentive. So you're protected against impermanent loss. You can maintain your long position on your BNT, and you can also get those really juicy yields from BNT liquidity mining. And then the same holds true for the ERC20 token side.
Yeah, and Nate, the little ticker here, like, okay, like the main thing that we missed so far on Zapper is these APYs are really helpful. And yeah, the numbers are, I mean, I'm calling this out. I don't hold any Bancor token at the moment. So like I'm calling out these numbers like as I see it. Like these are high numbers. And so anyways, if I'm long Bancor token, I mean, I can earn 154% here, 209, 265. The numbers fluctuate constantly, but just calling out like these are numbers that I've seen previously as I'm like monitoring these pools. So again, no brainer for me. I mean, that's a lot to earn. What is the 55-day ticker here? What does that refer to?
So the way the BNT liquidity mining works is the whole program lasts for 72 weeks, but each pool, once it's voted into the liquidity miner rewards program, and you can see all those pools with the rewards are, it's given rewards for 12 consecutive weeks. So the ticker right there is just showing how much time is left on that pool's reward cycle. And so yeah, and it's not just the BNT side too. You can deposit Link in there and get those BNT rewards. So that's the APY you would see from BNT rewards by providing single-sided protected Link liquidity. And then also you're going to get the swap fee APR. So if you go all the way in the right column, you'll see that the swap fee APR is pretty healthy today too.
Yeah, so, yeah, that's a reflection of the volume that we're seeing here. So I'd say the two risks to call out to folks are, as always, there's always smart contract risk with every DeFi app you use. You can buy, I don't think Cover Protocol offers it yet. I know Nexus does. So if you do plan to hold a significant amount of value here, you can actually buy Cover through Nexus to protect against a smart contract bug. And then I'd say other than that, like just being aware that if you pull out of these pools early, it's just 1% daily until you get to day 100. Who knows? You know, there's always something that could come up that forces your hand to pull money out of one of these pools.
And I guess one last thing to call out is that if you're withdrawing BNT from the system, the BNT is locked for 24 hours.
No, there we go.
So that's important, and it's just something to keep in mind.
Nate, one last question for you. You know, Bancor token just got listed. BNT just got listed on Coinbase. So congrats on that. I guess any like insights to share there? Like I think you were saying it was a surprise to you. Like you didn't, you know, you guys are always Coinbase, my understanding, is in contact with lots of teams, but I mean, like this announcement came and it was like, oh, that's great, right? Like you guys had no idea.
Yeah, I mean, we've been in touch with Coinbase for a while and know that they have a really strong appetite for DeFi and for supporting DeFi, and they see what's going on. They see what we're all so excited about. And yeah, I mean, for the most part, I was just lying, you know, like I said, I was lying up in bed last night. I was about to crash. I was just scrolling through DeFi dad stuff. And yeah, just
before everyone goes to sleep, they look at a video or two of me. There's nothing weird about that at all. So.
And so yeah, it just popped across my screen, and it's kind of like those days as like a builder in this space that you really, you know, there's some tough days that you have as a builder grinding. You know, we've all been through those bear markets, and then getting those types of that type of news is just awesome and was really cool to see. And it was really awesome to be alongside SNX and Aave. I think it was a real statement about, you know, how Coinbase feels about DeFi. And we were speaking about this too before, but just, I think we're going to see a lot of bridges connecting between the CeFi world and DeFi. And because, you know, at the end of the day, people who buy stuff on Coinbase, I think increasingly are going to want to get yield on it and start experimenting with these DeFi protocols. And Coinbase doesn't necessarily want them pulling their tokens off the exchange. So I think we're going to see a lot more built-in native integrations. We've already seen Coinbase Custody do some cool stuff with Compound and Maker, and we really think that liquidity pools is coming pretty soon, hopefully to natively to those centralized exchange experiences. But yeah, it's been an awesome 24 hours, and and really lots of gratitude too for the Bancor community, who is really, exploded, I'd say, since we launched our governance and DAO. We're seeing the just sort of collective wisdom from the crowd. We have everyone from like mechanical engineers in our active in our groups. There's something, by the way, about AMMs and mechanical engineers. I haven't quite gotten it, but like we have someone on our team who was a mechanical engineer. Like I think Curve,
Curve, I think he was a physicist, which is like close enough. It's
right.
Not close
physicists and mechanical engineers, but there's something about the way AMMs work that seems to like draw these types of disciplines. I think something about the like complex flows of how liquidity pools work. But anyways,
it's also too like what it's about growing the pie together. And there's, I mean, AMMs years ago, there was you guys, and then I think Uniswap was the second ever like real like AMM and launched obviously with an ETH pairing. But now like AMMs are really becoming, it's a standard, and like people prefer seemingly to trade on them if you're in DeFi. And I always just think about the network effects of like, if I'm already into like, let's say Uniswap or Curve, and I learn about single-sided LPs, I'm like, oh, okay, like I clearly know the pain point. But then similarly, we're going to have new users come in the next 6 months who have never tried any app. Maybe they try these single-sided LPs, and then they're like, oh, okay, I get it. They learn what impermanent loss is, and then maybe there's a strategy to deploy there. So all these, like, it's always this idea of, I think everyone's collectively building towards like this same endpoint of like, we're a very niche community right now, but like, I think we all believe like this is what should be the standard. We're email and the world's operating as like a postage service with your money. And we're like screaming, why are you guys not using email for your money? So
yeah, I would say impermanent loss fuels the sort of contrarian argument against AMMs. Like, how do you support or allow this thing to truly scale if a lot of LPs have to take this massive risk and a lot end up losing money? Because yield farming really, it like patched the issue, right? It hit it for a little bit, like, oh, I'm getting crazy yield from these rewards. Like AMMs are great, but then as yield farming is not truly sustainable, right? In a lot of the iterations that we saw in the early phases or over the summer. And so you're left with AMMs and thinking, you really need to figure out a way where swap fee income can provide users with a compelling incentive to stake. And I don't think AMMs will get very far if we don't fully tackle this issue of impermanent loss. And really what we've done is we've removed it from the equation for liquidity providers. And we've shifted it onto the Bancor protocol in a way that allows the protocol to also reap the rewards and sort of diversify the impermanent loss risk across many different pools, whereby some pools are more stable and there's not that much impermanent loss, and the protocol is able to generate a bunch of fees from those. And then some are gonna like wreck the protocol, right? And you'll get potentially hit with some impermanent loss. But at least on this initial data that we've seen is that there's enough pools, there's like 60 whitelisted pools now, there's enough pools that are generating enough revenue where you can actually see BNT supply being deflationary. And so I think this idea of diversifying risk across many liquidity pools is super fascinating, and something we're really excited to share with the community.
Really cool stuff, man. Well, hey, great to catch up with you, and congrats on the listing with Coinbase. But I think more importantly, congrats on the single-sided LP stuff. It's been a fascinating like, oh shit journey for me, from like, what the hell are they talking about, to like, oh wow, like this makes total sense. So I appreciate you coming on and helping me to explain it. Would love to have you back, of course. We're gonna have Sam from Instadapp on next, but cool. I want to remind everyone, you can go to bancor.network if you want to learn about Bancor. You can try the single-sided LPs at zapper.fi/invest, search Bancor. Follow Nate on Twitter. He's got lots of great insights. I think always the fact that like your origins in journalism, like that you're a great storyteller. So it shows in all you have to share here.
Thank you, man. I really appreciate you being such an early adopter of this stuff and help spreading the word. It's not always that intuitive, and I think you do an awesome job here, and really appreciate you, man. So thank you.
Oh man, I appreciate it. Thank you so much. Well, I'm gonna bring here we go. I'll bring Sam on, and then we'll say bye to Nate. So thanks so much, Nate. I'll pull you off the screen.
Take care.
Sam, how's it going? Welcome to Yield TV. How you doing?
Hey, I'm great.
Your hair looks great.
It's been some time.
Yeah, it has been.
Yeah.
Your hair looks fantastic. Like that's the my hair was so long a few months ago, and my wife just finally she set up a haircut for me, but my hair didn't look good like yours. Mine was I look like a wild
I
man.
don't think so. I mean, it's hard to maintain. Yeah. It's a bit curly. I don't know.
All natural. Well, hey, like Sam, I wanted to catch up with you about like what's the latest with Instadapp. You know, one of the things that was exciting to me was seeing you guys released a migration for Aave V1 to V2, and if they do that, it imports their position, whether it's in Aave or whether it's in a DeFi smart with you.
Yeah.
It pulls it into Instadapp. So yeah, like talk about that a few minutes, and also would love to screen share that if you're comfortable. But also would love to learn more about like what else is cooking, because you guys always have all the crazy flash loan recipes.
Yeah. So we recently launched Aave V2 support and the migration. So I mean, as usual, we recently shifted to DYDX flash loan because it's free. So there's also one amazing fact, like we recently created our internal new flash loan, which we are using on the DSA. So how it works is it uses 4 different protocols: DYDX, Maker, Compound, and Aave, and it's free of cost. So we source the flash loan from DYDX, and if we need some particular token that only Aave provides, so we get the Ethereum from DYDX. We deposit the Ethereum into Aave, we borrow the particular token, do the transaction, and then reverse the process. So all our flash loan goes through DYDX, but we source any kind of token. So if we needed liquidity of, let's say, 15, 16 million DAI, Aave doesn't have that much amount of DAI. We go to MakerDAO, we deposit DYDX Ethereum into the MakerDAO, we borrow 17 million DAI, and then a user can maybe maximize their comp recipe or anything, and they can do as big transaction as they want to with the DYDX flash loan. So yeah, I mean, that's an interesting concept that we are using, like a new flash loan that we have created internally for our use. But yeah, I mean, our Aave migration is also powered by this, so it's free for the users to use. But yeah, I mean, it's all powered by DYDX flash loan. And how it works is we are sourcing DYDX Ethereum flash loan, we're depositing it into the Aave V2, and then we're borrowing the tokens that user has borrowed into Aave V1. We're paying back all the tokens. We are transferring all the liquidity from Aave V1 to V2, and then we are borrowing the same tokens. So sorry, we have already done the borrowed, and then we are withdrawing the Ethereum and sending it back to DYDX. So it's pretty simple, but yeah, we're sourcing all the flash loan from DYDX.
You know, as we're talking about this, I'm also realizing there's probably someone out there who doesn't know what Instadapp is. Do you mind be able to share a screen, and I'll put it up, and yeah, would love to kind of showcase some of the really cool stuff that you guys do.
Okay, so you're putting it up. Okay, that'd be good.
Or no, go ahead. You can yeah, would you be comfortable sharing yours? I don't know if you've got a report that we can show. As long as it's, I don't want to expose anything private, but if you've got something.
So yeah, I already opened the test account that we use on Instadapp for all the development, so it's no problem. We can expose that.
Oh yeah, I was gonna say, you are like one of the one of the moments where I like really finally understood how powerful Instadapp was you were doing examples with flash loans with stablecoin positions and creating leverage positions. This was back, of course, with Compound. So I really feel like a lot of the excitement and the attention that was drawn to comp mining and to all the other protocols, that goes back to some of the magic you guys enabled with flash loans. So anyways, if you have, I can see yours. I'm going to add it to the stream. Oh, there we go. You've got your ready. Cool. Here we go. So yeah, I mean, through it. Like, what is Instadapp, and what folks should be looking at Instadapp to use it as a tool?
So basically, like currently we have this normal dashboard. We recently launched our migration, and we have like 4 borrow and lending platform support. We are soon going to launch a good advanced version of refinancing, where you can just refinance your loan from Maker, Compound, on all the 3 platforms in however way you want. You can just refinance as many tokens as you want at once. So I mean, that would be a good feature. But our recent feature was our migration, so I'll just show that one. So it's like if the user is already an Instadapp user, they can just click on migrate and all their loan will get shifted to our V2. I mean, that's the simple thing. Like, it's just a one-click migration. And if they are on the Aave portal, then they have to give the allowance of the A tokens they hold. So this is the A ETH that I have. And the borrowed tokens doesn't need any allowance. So I mean, this is pretty simple. Like, user can just come to the UI and they can do the migration. But the only thing is, the end position will be on Instadapp. It's not technically possible to have it on Aave until Aave releases their own migration, because then that will be deeply integrated into their protocol, which will make it possible to have it on the normal MetaMask address. But technically, it's like, according to the whatever power we have, we can't have it on the Aave if we are doing all the migration on the because we are using DeFi smart account for the migration.
Well, and so they can take advantage then of credit swaps and debt swaps if they do migrate to V2 with you, right? Like that's also possible. Like, you guys had already enabled some of this if you were in a position in Aave and V1. Aave has added the ability to say, let's say I've got wrapped Bitcoin and Ether as 2 different collaterals, and for some reason I'm now bearish on wrapped Bitcoin. I can swap it without having to close a very complex position.
So we have these recipes on all the platforms. So there is Compound, we have it on Compound. There is our V1, we already have it, had it on our V1 and also on the our V2. And we are also coming up with new strategies. I mean, that will be like, I mean, we are working on it currently. So basically, I mean, as you said, the collateral swap. So you can just select whatever collateral you have. Let's say I selected Ethereum. I want to swap my collateral into DAI. Then I'll just enter the Ethereum amount and just swap collateral. So my Ethereum collateral will get converted into DAI. So, and same goes for the dApp swap. If I want to swap my dApp into DAI or any other tokens, it's just a one-click transaction.
Cool. Yeah. Again, there's a lot of power there that, like, if you're excited for V2, if you need to do a credit swap or a debt swap for some reason, which, like, a simple example is I had some SUSD that I had borrowed, and the rate up to like 100%, and I wanted to get out of it. And that would be a good example. If I was in V1, I could migrate to V2 sooner than waiting for Aave. And then with you guys, I'm able to do that debt swap. So now instead, let's say I've borrowed USDC and I'm paying like 7% APY, or whatever it is, versus the crazy 100% interest rate.
Yeah, exactly. So I mean, we have seen many different users. Like, this is one use case to change your depth position according to the interest rate. But a lot of users are using it for shorting and longing, or like going long or short on the token. So if they think that market is going to go down, they shift their collateral. Like, they have collateral in Ethereum, they shift their Ethereum collateral into into USDC or DAI or any other stable coins. And when the Ethereum goes down and when they think like it's the right time, so they again go back to the Ethereum. So I mean, we have seen a lot of users been using collateral swap in this way. They also use DApp swap. Like if the Ethereum is going to go down, they shift their DAI dApps into Ethereum. Then when the Ethereum goes down, their dApp decreases, and then they can again shift it back to the DAI. So I mean, it involves some risks, because I mean, you don't know for sure if the price is going to go down or up. But we have seen like a lot of decent user, like with good enough amount, been doing these kind of stuff, which was like really fascinating.
Sam, are there any strategies? So on the right-hand side, if you've never used Instadapp, strategies, or like you could call them flash loan recipes. I think we used to call them recipes.
Yeah.
So these strategies, are there any that you would call out that you think are that, I don't know, like more users should know about? Like there's a lot here and they're really powerful, and like I'm too familiar with them now. So I'm thinking about like, I don't know, any like strategies or use cases lately that you think are being underutilized and that people should take a look at here?
So, I mean, recently we've seen a rise of use in collateral swap, and mainly collateral swap. We didn't thought that so many people will use collateral swap, but yeah, I mean, as I said, like given a few examples, like how they're using collateral swap. So, I mean, this is like a really powerful recipe. Like people also used it for buying like DeFi tokens, like shifting the collateral from Ethereum to Wi-Fi. So here's another good
Very cool.
example. So let's say if you have a Wi-Fi collateral on Aave, which has like a liquidation at, I think it has a collateral factor or liquidation limit at zero point 0.4 or zero point 0.5 something, and Ethereum has at 0.82. So it's like Ethereum liquidation limit is just double. So if the market is going down, users just shift their collateral from a Wi-Fi, Uni, or other tokens to Ethereum, and they get a huge margin on their liquidation. So this is like awesome use case where they still have a good token, but they have like decreased the risk of their liquidation. So I mean, this is like the awesome use case. So also on Compound, like Uni has liquidation as 0.6, like at 60%. If you shift your collateral into Ethereum, it becomes 75%. So I mean, if the market is going down, you can just get your margin without like closing your position. Just shift your token into a different position. So I mean, the rates between DeFi tokens and Ethereum doesn't vary a lot, but rates between DeFi token and stable coins varies a lot according to the market volatility. Like if the market is going up, all of the tokens are going up. If the market is going down, all of the tokens are going down. So I mean, yeah, these kind of,
like what used to happen is someone could have let's say you have 3 or 4 collateral types and you've got a loan against those. I mean, you would have to have paid that back. And the fact that now that you can just easily go in and say, you know, I want to consolidate to ETH. Like this is actually something, we're not there yet, but I do, you know, I think again, hopefully we're still at the start of a bull market, but when you eventually are getting to major tops in the market, one of the things I would expect is that there will be people with sizable loans who want to consolidate to Ether. They'll, for one reason or another, no longer want to hold some of the non-ETH tokens, and
yeah.
That is not as easy to do. That was something that wasn't as easy to do back in the day, and now
I mean, it's kind of impossible, because I mean, you can't even close your position because you don't have enough token to close it. So I mean, it's just impossible to do without flash loan.
Yeah. So this is really powerful stuff. Credit swaps and debt swaps are really popular in traditional finance, and I've always been puzzled by like how like it's just not something that like your average investor would know about. But I think this is another example of like DeFi making everything more understandable and transparent, and these are use cases that I think the average user could have a very small loan, but could potentially benefit from a credit or debt swap using a tool like this. So, Sam, anything else that you think is worth noting? Like, I guess like major releases that we should look forward to, or
Yeah. So
background shows
we
about
yeah. So yeah, we recently released some comp claiming recipes, and other than that, we are soon going to get into automations. So I think like bull market is near, and we'll provide automation so that users can save themselves from liquidation. So let's say liquidation on MakerDAO is at 66%. We'll provide the automation for the refinancing. So MakerDAO liquidation is at 66.66%
Mhm.
on a Ether vault, but with the same collateral, Ethereum Aave has at 82.5%. So we can just shift their loan for the time being to the Aave, and they won't get liquidated. So we'll provide automation functionalities of these, and we are working with Gelato, if you know them, on the
Yeah, I
automation side.
do. Yeah, that's awesome. I wasn't sure whether they were still building. That's great to hear because I remember trying their app like a year ago, but I think did they shift to being more of like less of a front end and working more with developers?
I think yeah, they are talking with few other developers, but yeah, I mean we've been working since last 2 months and we have like done a lot of progress.
Wow.
We'll probably launch automation next week, but if we like it's like a holiday season, so we might like launch it after New Year. Like it's not sure. Depending on the market, like how active the market is, we might launch it next week. But if not, then probably like first week of Jan.
Yeah, it's funny. My wife was asking me, "Do you think things will slow down with like the holidays?" Like, she understands our industry better than most, but she asked that, and I was like, probably not.
Maybe.
Probably not. I don't know. I
Yeah.
mean, maybe, but like, I think no one ever really tunes out. We're all like, I don't know. It's just an exciting time. It's a good
Yeah, I
thing.
mean
A bad
it's a diverse, so diverse community. Like,
Yeah.
yeah, if someone is on a holiday, like probably there are people somewhere else in the world who are working. So yeah, I mean,
Yeah, absolutely. So yeah, definitely would encourage everyone to, if you go to instadapp.io, if you've never used it, it's really quick and easy to create a DeFi smart account. It just you're creating. Am I right to say, Sam? Is it like a proxy account, like that gives you all these superpowers? Is that the right term for it?
yeah. You can say proxy accounts or smart accounts or smart wallets. Like there are different terms for it.
Cool. And then what you see here on the right-hand side are these are new recipes I didn't know about. So like there's some really like cool automations there, like claim comp, swap into different asset and deposit into compound.
Yeah.
That's putting like, if you're earning a lot of comp, this is a great way to put that comp to work if you prefer to swap it for something, let's say like Ether.
And then there is also delegation to Instadapp. If a user wants to delegate their comp to Instadapp, they can just do it from our UI.
Oh, cool. Very interesting. Yeah.
Yeah. So
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 much.
we are getting into politics.
Yeah. Oh, that's right. They're sorry there. I had something stuck. That's cool. So they can delegate, that's delegating voting power to you, because Instadapp is one of the premier DeFi apps that has a real stake in governance there, just because of all the work you guys do. So yeah, that's a great feature there. Especially if you hold comp and you're not voting, or you just don't care to be active in governance, like delegating, I think is the most responsible thing you can do,
Yeah.
whether it's to Instadapp or someone else you feel strongly about. Well, okay, so quick reminder then, everyone should check out instadapp.io. That's where you can learn more. If you already have an account, we covered the Aave V1 to V2 migration. We've got new recipes for comp, which are really cool, that we just highlighted there. Make sure you follow Sam on Twitter. I feel like you do some of like the best demos of your like insanely powerful product. Like I remember like people commenting on the leverage positions that you had open, which were stable coins, which this isn't financial advice, but I would argue that they were safer, because they were stable coins. And
Yeah.
mean, there's no better way to get attention than to like use your own product and really like show like.
Yeah, I mean, yeah, I had made a lot of money out of it, so I just tweet about it, and I mean,
That's
like
great.
if I mean, yeah, yeah, we are the proper user of our platform, I would say. Like we have taken part on every feature that we provide. When we launched comp mining, we used it, like we are still using it, and but at that time we used it like crazy. Then we provided DAI shorting, and then we used it like crazy. Like I'm not telling about the profits that we had, but it was pretty decent. Like if you say like whatever amount we invested, we got like 50% out of it. Like
Yeah.
we did it 150% in just a week. Like yeah, I mean, if you use all the strategies at the right time, then yeah, I mean, you can get good benefits. Then
It's
yeah, I
pretty
mean,
cool. It's another example too of I mean, you guys could have just built this stuff for yourself, but like I think this is what's really, you know, special about the DeFi community and open source software and Ethereum is you know, you guys have built these tools and you've enabled people to be able to use them. So just yeah, thanks again. I've used Instadapp quite a bit, and I continue to think of it as like it's like a Superman cape you put on for doing all this stuff in DeFi. Sam, hey, if you guys have more new features come out, you know, in the coming weeks and months, you know, just please ping me, and we'd love to have you back on to show it off. But
yeah, so I would just like to mention, like we are going to release a new product which will be on the governance side. We haven't released any details out yet, but it would be like a totally new product. So it's like it will be like a kind of a governance aggregator kind of thing.
oh, interesting. Okay, and this is like governance of like protocols like Maker, Compound, Aave.
So we are currently starting with a compound-based DAO, so Compound and Uniswap, and any user can create compound-based DAO. So that will be a launch, and user can also user will have two UI, one on Compound UI to manage the Compound governance, and our UI to manage the same governance from our UI. So I mean, yeah, and they can also create their own compound-based DAO in just a single transaction. So I mean, there aren't any details out yet, but would be an interesting thing.
So interesting, man. Well, great to see you. I'm gonna go ahead and bring Richard on here, and then we'll say bye to you, Sam. But thank you so much for joining, and yeah, man, just stay in touch. Keep up the great work.
Awesome. All right. Okay.
Thanks.
Then. Bye. Yeah.
Bye. And I'm gonna go ahead and remove. There we go. Richard, what's up,
hey, man? Good to see you again.
Good to see you. Yeah, gosh, I think we talked less than 7 days ago. So
yeah, something like that.
How is everything going?
Good.
Yeah, so just some background on Richard. He's a partner at One Confirmation, but I think you've been really notable for you create awesome publicly available charts for tracking things like Nexus Mutual. You create some like really intricate charts at nexustracker.io. And then what we're going to talk about today is more about crypto art trends or NFT art trends, which your website there, I'm going to add it in here, is check out cryptoart.io. Here we go. There we go. But Richard, yeah, maybe we should start with your background, you know, beyond what I was just sharing there. Can you tell us more about like, how did you get into crypto? And I guess how many years have you been working, you know, in this greater Ethereum DeFi space?
Yeah, for sure. So I actually got started in crypto back when I was at school. Co-founded the Stanford Blockchain Club with a few other folks. A lot of us are like pretty deep in the crypto industry. When I co-founded is Alex Pruden, who was formerly at A16Z. Now he's at Alio. So it got really started in the crypto space more from the academic lens, doing like a lot of research in like cryptography, mechanism design, game theory with like Dan Bonnet, Tim Roughgarden, like those folks. And then crypto just like kind of appealed to me because it was like at an intersection of a bunch of different like interesting trends. Like I'm interested in economics, interested in finance, as well as like the more technical stuff like cryptography, game theory. So that's kind of how I went down the rabbit hole. And then got involved with One Confirmation beginning of 2018. So like right at like the last crypto boom and basically like rode it all the way down. And like it's interesting to see like now things are starting to pick back up after like 2 years of crypto winter.
Wow. Yeah, I know. It feels like I've said it like twice today that I think we're in a bull market now. I like always like hesitate because I feel like I've been tamed by the bear market to always assume that like the worst is about to happen next. But yeah, I think we've finally gotten through it, and we're starting to see more money flow in, and more importantly, seeing like new users flow in. Richard, do you want to talk a bit about like maybe some of the investments you've been involved in at One Confirmation before we talk more about crypto art?
Yeah, for sure. So Nexus Mutual is one. Built the Nexus tracker to help with them, and that's kind of been the go-to resource for like all stats on Nexus. And like Hugh has like interesting anecdotes. Like whenever he talks like about Nexus to his like old insurance friends, like in the old insurance industry, like they're always like mind blown when like he tells them that like the team actually didn't build Nexus tracker. It was like a community member. So like
that's right. I know that story well. Yeah, it's really. I think he was talking to me about that on Yield TV. That like the numbers are nuts because you can immediately confirm to his colleagues like everything that's all the activity on Nexus, but the fact that that he didn't have to build it. He's like, what? Like, why would someone do that? And you're like, it's just kind of the nature of this community. So there's Nexus. What other major investments have you been involved in, or maybe just what you're excited about?
Yeah, Super Rare is one. I mean, we're going to talk about art. Like,
I did not know that. What?
Okay.
So that's great. How far back does that go that you invested in Super Rare?
It was around early summer.
Wow. Yeah. I did not realize it. I've known Super Rare for a few years, but I would never pretend like 2 years ago I was like, like this is gonna blow up and you're all a bunch of idiots for not paying attention. Like it took me time to really start to appreciate like, whoa, this is like a whole new marketplace of art. And it's smart because it's all verifiable on the blockchain. But more importantly, no one gives a shit as long as they can resell this stuff on a secondary market. It's incredible what Super Rare's accomplished.
Yeah, we also did OpenSea. This is like way back in 2018. So it's interesting to see like, we have big exposure in NFTs with OpenSea and Super Rare, and like OpenSea like kind of rode the first wave with CryptoKitties and just like been like basically consolidated their position as like the market leader and like go-to place for all like secondary sales and like as like the marketplace for NFTs. And then now like Super Rare has been around since 2018, but it wasn't until like early mid this year that like things started to like really take off and like you see the hockey stick graph. So we have pretty good exposure to NFTs with both OpenSea and Super Rare.
Yeah. Wow. Yeah. Those are two mega marketplaces. Do you have any charts on OpenSea's growth? Like,
yes, I have a Dune dashboard.
And by the way, we could start to talk through like some of the data that you aggregate at cryptoart.io. I can't remember though. I don't think I've ever looked at anything related to OpenSea. Maybe I just missed it there. But yeah,
love the link in the chat.
Oh, here we go. Oh, and here you go. So I can show this, Richard. Up to you if it's easier. You can share it as well. I'll just put your screen up on screen. So if you click the little share screen at the bottom center there.
Oh, sure.
Yeah, just if it makes it easier. Here we go. And then once that comes up, I'll add it to the stream here. Here we go.
Okay.
All right. Yeah, dude, go right ahead.
It looks like this hasn't been refreshed in 8 days, but as you can see, OpenSea, they've been around. This data goes back to June 2018. So yeah, they've been around since basically the beginning of NFTs, and it wasn't until I guess like right when DeFi summer had like a slight cooling off, then like the NFT market like exploded, and you can see with these 3 months, September, October, November. December hasn't been updated in December, but I think December is gonna also be like somewhere up here.
Wow.
with the users, it's interesting because I also have the DeFi users June dashboard, which, total DeFi users just hit 1 million. And like OpenSea, they have about 34,000 users. And like, if you compare them to like other projects, it's like, I think the top 4, top 5 projects in terms of number of users, along with like, Swap, Compound, I think MakerDAO's up there now. So I think people underestimate like the market, like the number of people using NFTs, because people naturally assume that there's more DeFi traders than NFT people.
Yeah, there is, I think, an easy on-ramp here, because like with NFTs, especially art, I mean, if you're an artist, if you're a digital artist, and you see your friends are minting art and selling it as quickly as what I'm seeing it sell on Super Rare, and gosh, OpenSea is like I go on Super Rare more because it doesn't make my head explode as much. Like OpenSea has so much because it just aggregates everything. I just can't imagine being a digital artist and not looking at that and saying, I want in on that. Why the hell would I do it any differently? Like, why wouldn't I? This is awesome. This is a way for me to ensure that my art is always that the authenticity of it is verifiable for them to buy it, that it's easily transferable, and that it is exposed to a really liquid market. Like the liquidity in the market is mind-blowing to me right now. I mean, if you go to Super Rare and you just look at recently listed or like newest pieces of art, I mean, this stuff goes within like 24 hours or something. So maybe that's a lead-in then to, should we look at cryptoart.io, or we can hop into Super Rare, whatever's your preference?
I guess, we can just hop into CryptoArt.
All right. Go. And same thing, once you share that, I'll
okay, you want me to share screen? Cool.
Oh, yeah. If you don't, only because I can share it. I just figure if you want to point to anything along the way, it makes it easy.
I have 2 CryptoArt tabs.
All right.
See it?
Oh, man, there we go. Oh, my gosh. Yeah, let's start with the insanity here.
So the insanity, Beeple. So I guess if you've been sleeping under a rock, you didn't. Yeah, basically the crypto art industry exploded over the weekend. So Beeple is this big name digital artist. He has like, I think 2.7 million Instagram followers. And then he did a massive drop on Nifty Gateway over the weekend. He made 3.5 million in primary sales. And like based on secondary sales, that would put his like total artwork value to about 6.4 million. So it's pretty insane. As you can see here.
Actually, Richard, can you help to frame like why it is that his art goes for that much? Like, I guess, can you give some of the background on like Beeple? Like, is it the fact, like, my understanding is he's been around for many, many years. I appreciate the obvious here that his art is really cool. Like I guess I don't like question that, but there's a lot of history to him. Like I like pounding the pavement and continuing to like release art. Is it almost every day? Has he been?
Every day. So he's basically built his like followers for like the past 13 years from like creating these everydays. So like, these are all Beeple artworks, part of the Beeple Everyday series. So he's been creating everydays for 13 years without like ever missing a single day, which is like pretty insane. And he's been doing all of this for free. Just like at the end of the day, he posts the image on his Instagram and like it's out there for free. And like, it's crazy. Like after 13 years, like he decides to tokenize his art and actually like cash out or like make a profit off of what he's been doing for 13 years, just grinding straight without ever like monetizing any of this.
Wow. Yeah. It's just nuts to like see. So the recent piece that he created went for $777,777.77. But like someone was bidding like 360,000 or something, and it was like minutes before that this crazy bid came in, and the person that bid on it too is like, is like a well-known digital art collector, right?
Yeah,
Like
Illustrator. It was just Max Kane. Yeah, so it was crazy. I was watching like all these bids live. It was like pretty entertaining, and like I couldn't really do anything else like over the weekend.
Yeah.
Yeah, it was like a bidding war where they're incrementally bidding like in the 300,000s, and then just like, Max Kang at the end, he just like drops the mic and then bids 777,000 and like ends the entire thing.
Wow. Like it's just it's just crazy. And this was sold on Nifty Gateway. Maybe you could help us understand, why does one choose Nifty Gateway versus Super Rare versus Maker's Place? Trying to think of others here.
Yeah, I can probably give an overview of the like art landscape. So like Nifty Gateway does drops. Nifty Gateway kind of caters towards like mainstream retail because it's like the payments are done in credit card, and like the stuff is like the NFTs are custodial. So a lot of stuff is like off chain, and like they do drops, which means that an artist like right at like 7 p.m. Eastern, artists will like drop a bunch of artworks, and like some of them like you just have to like race and see like who can like click buy first because like they sell instantly. Some of them there's like bids, so it's a good platform for new artists to like get introduced. And like Super Rare, Maker's Place, Known Origin are like for the more serious art collectors, and that's where you see like the big name whales like Pablo from Mocha. You see E.T. Yun, Max Stealth, Moderats, Eat Squiat, and others who've been collecting art for a very long time, and like they do those on like Super Rare and these like dedicated platforms. Async art is interesting because they do programmable art. So let me pull up this piece. So ETH Boy, this is actually a better one would be the Bitcoin piece. So this artwork the image actually changes based on like what the price of Bitcoin is. So like the NFT itself has like an oracle that can like update the artwork based on like external factors, and like async provides that functionality.
Wow. Yeah, I mean this art becomes like really smart. It just like we're not like just having digital art itself, I think, is already really smart, but there's some really like clever interactive things that we're seeing done. And I know the latest with a number of Beeple's pieces were that you get like a physical piece, right?
Yeah, so these yeah, so it's what do you call it? It's kind of like a tablet. It's like autoplay tablet where he ships it to you, and then you get the physical piece plus the NFT.
Very cool. Very, very cool. Yeah, just nuts. I mean, these pieces, I think the Keanu vaccine prevention is the most, that's hilarious. That's one of my favorites.
Oh yeah. How much? This was 124K. One interesting thing about the Beeple auction was that the people who won the auction, most of the auctions were like new people like that I haven't heard of. And the existing like whale collectors were getting outbid. Like this one was by like MCAP, which I've never heard of MCAP before.
Wow. That's, yeah. I mean, I think there's got to be more people out there who are holding Ether, especially that just weren't paying close enough attention to this and are like realizing like I mean, first off, like if you think this is cool, which is where I mainly come from in terms of collecting, I just want to collect art because I think it's really cool looking. Mm-hmm. But from an investment standpoint, I mean, you see these numbers going up, and you look at the legacy markets of art collecting, and you start to think like, doesn't it feel like we're just at the beginning of this? Like that, like we've barely hit the play button, and that there's like so much more ahead of us. So, I don't know. I don't know if that thesis will play out, but I feel pretty strongly that there's no way that more people who are already collecting art and those who haven't even started to start collecting art, there's no way that they're not going to see this and say, well, that makes a hell of a lot more sense than me going to bid at some, auction with the crazy elites that buy multi-million-dollar pieces of art.
Yeah. I mean, like kind of like we're kind of at the beginnings, like right, like at the product market fit point of crypto art. And like it reminds me of like how DeFi was, like in 2019, I guess, where like it looks like a toy to most people, but you have a very like passionate community that spends a lot of time on it. There's like a lot of money being like quickly going into the industry, and like you want to like capture that inflection point, which is like one thing I think about a lot as an investor.
Absolutely. Talk us through, what are we looking at here with top artists?
Yeah, so this was like probably the main reason why I wanted to create this. So like, you know, everyone uses like CoinGecko, CoinMarketCap to like check the top coins, but there wasn't like really such place for crypto art. So I decided to like build the same thing.
Wow.
So you can see here like it's sorted by total artwork value. See like some of the top artists: Beeple, Pac, Hackatow, Trevor Jones, Xcopy, Jose Delbo, Coldy, A Lot of Money, Frenetic Void, Twisted Vacancy.
Oh man, actually, is there any chance, Richard, you could talk us through Jose is it Delby? Am I saying that correctly? Delby?
Delbo, yeah. I'm not too familiar with his artwork, to be honest.
This guy though, he was one of the cartoonists with like DC Comics or Marvel and like, so this is, are these new pieces that he's creating, or do you know, are these older pieces that he's just
I'm not sure. I haven't collected any of his artwork, so like I'm not too familiar with it.
It's really cool though. I mean, all you have to do is like, if you like Batman or Wonder Woman or any of these really, really popular comics, like I know I looked through it and was like, whoa, like, like there's something where not only do I want that, but I know that there's so many people out there who already like love Batman and like are going to want to collect this, and they're going to be willing to go the extra mile to learn like how to use an Ethereum wallet. I think in the case of Maker's Place, which is where he's listed, you don't even have to use Ether, but
Maker's Place has fiat on ramps. That's where he has most of his artworks.
So nuts here. What other trends, Richard, do you find interesting in the crypto art space? Like, what else should people keep their eye on or use as like an indicator that they should be paying more attention?
Yeah, I mean, so like Pac recently was the first artist to surpass 1 million in total artwork value. It's like for most of these artists, like they didn't like start, like they didn't join the industry until like beginning of 2020, beginning of this year. Wow. So it's crazy that like a lot of these artists have earned like six figures in just a year. And it's like a very like solid like source of income for these artists. So I expect to see like way more artists. Like right now we have about 40 that are in 6 figures. I expect to see like way more than that, like maybe 100 over 6 figures by like December 2021.
Do they earn anything from when there's a secondary sale? So there's, by the way, there's terms here I want to make sure people understand. The primary sale refers to the artist releases it and you buy it from the artist. A secondary sale is whoever originally bought it is selling it or has like rebought it from someone else. Do these artists earn anything from these secondary sales? Is there a mechanism that's working there for them?
So it depends on the platform. So I know Super Rare, the artist earns 3%. I think it's 3%. Cool. Actually, that might be the Super Rare fee, but they earn some commission from secondary sales, which is great because like in the traditional art world, it has a problem of like flippers. Where like someone will like buy from a primary from an artist and just like flip it on and at an auction house like a couple months later. But like with secondary sales and artists earning some royalty from secondary sales, they get that in perpetuity.
That's really cool. Yeah, I like that too. I think it makes sense that the person who originally created it should benefit from these secondary sales if maybe they sold it for much less than what the market values it at. Like, I think that's a really interesting mechanism. Yeah. Too, like these are a few of the names that I had known before. Could you click on some of these, like the Mobius knot? That is such a cool one. I think, does Whale Shark own that? No, Illustrator.
Illustrator. Oh, this is another Tim Kang one, Illustrator.
So cool.
Yeah.
Wait, do you happen to know Tim Kang is like, is there any other like public information about him? Like,
no, he just has a Twitter, so he's like publicly known, but yeah, I don't know too much about him.
No. Yeah, just interesting to kind of learn more about those that are like in this space. But Richard, do you collect a lot of still pieces? I don't know what's the proper term, but versus like animations and
Yeah. I tend to prefer like video pieces because I think that's like what's really unique about like digital art.
Yeah, I like that. I did actually buy some still pieces, if I'm saying that correctly. I bought one, but it was 2 pieces and I was able to get them both. So if I can get like a crypto voxels parcel, I can put them together. And I thought that was really cool. Like I was pretty excited, like I felt like I got them at like a decent price.
I also built a super rare bot, like a Twitter bot for super rare sales. So like whenever you buy something, then you get tagged in the bot. So
I love it.
You probably got your Twitter notifications.
I was going to say I've been very active the last week. I mean, it's only been maybe 2 weeks since I interviewed Matthew from Cent, and he's always told me that I should try this, like, or at least like I've known him about almost a year, and I finally like dove into super rare again and was like, whoa, like this stuff is so cool. I gotta be careful I don't burn all my ether on art.
I had to like set like a limit on like how much I spend on art because like I like the peak I was like spending like a pretty ridiculous amount on art like every week. So I had to like control myself.
Yeah, setting a limit. Like I gotta say too, like I mean I'm buying like some of the least expensive stuff, but like I think it's cool. Like I was showing some friends it, and a few of them got it. A few of them were like, "What the hell are you doing? Like, what is all of this?" But I don't know. The animations are just so cool. Pac here is. I don't know if you can click on a few other ones here. These are such cool.
Yeah, this one's my favorite duplicate.
Wow. That is so. They're just so interesting to look at. It's so much more fun to me than, still pieces. But the cool thing about still pieces that are NFTs is that you can similarly display them and you can be able to like enjoy them in VR. And to me, like that's been especially awesome the last year or ever since the pandemic started.
Mm-hmm. Yeah, I've had like way more time to look at art. Since
do you think that that's a part of the explosion of like sales this year? Like, is it just
I don't know actually, because like with like the coronavirus recession, you expect like a decrease in like disposable income, but I guess maybe people just have like a bunch of extra time on their hand or like buying art.
Yeah. It seems like there was definitely some money flowing in from DeFi, but this space was already on fire. Like one of the things that I would encourage everyone like to check into the WIT meetup through Crypto Voxels. Like you'll find there's a very vibrant community, and that I don't think that this, like, I don't think we're seeing the after effects of or downstream effects from like DeFi and just Bitcoin price going higher this year. Like this is a community that's been there for some time, and it was just a matter of time before there was an explosion of interest. But it's still very niche too. Like there's so many more people that are going to come in, and this thing with Beeple is just nuts. Like congrats to him too. Like I think it's nuts as in like a really cool way. It's just it's exciting to watch. And what else here? Any other like charts?
Yeah, I mean, I want to talk about this graph. So this was like another like motivating factor for creating crypto art. Is like I like to see like an artist like trends like trend over time. Like are their pieces getting more and more expensive? Like you can see here with Pac, where like if you were like if you had a good eye for art and like you bet on an artist early, back then they were selling for like just under 2K. I mean, this is. By the way, this is based on current price of ETH. So ETH was cheaper in February, so it's even like bigger of a return. And like now they're selling for like 20. So it's like a 22K. So it's like a 10x since.
Wow. Yeah, that's something. If you are on super rare, it cleverly shows you what the price is next to the Ether price. In parentheses, it shows you the USD price at the time of sale.
Yeah.
And you'll see someone bought it for like 0.15 ETH and it was like $17 or something. But
Mhm.
like now 0.15 ETH is, what is that like? It's well over $100. So
yeah.
it's pretty cool. It's all at the end of the day, it's all measured in ETH. I mean, ETH tends to be, I guess, am I wrong to say, Richard, ETH is like the main form of payment that we're seeing?
Yeah. You can say ETH is like a unit of account.
Yeah.
You can be like a unit of account maxi.
Yeah. ETH is money. Oh, there we go. So, cool. Well, gosh, I gotta definitely check out that listing of their artwork. Like, I love that. It reminds me of DeFi Pulse or like CoinGecko in a way, being able to track those like major numbers. Those are like really nice macro numbers to share with friends who are like, what is this crypto art thing you're into? And you can like quickly show off like, well, like there's a lot of activity here that you're missing on. But what is this here?
This one just kind of like a macro like chart to track the industry. This doesn't include Nifty Gateway because their stuff is done off chain. But for the art galleries that are on chain, then you can see like all the data is public, so you can see like how the industry has like exploded. It's like growing 50% month over month for like the last like half year.
Wow. Just nuts. Wait, why is Nifty Gateway off chain? Like, I guess
well, off chain probably isn't the right word. It's custodial. So basically, they mint all the NFTs and they store in their own wallet. And unless you want to like withdraw it to your own like your own address, then it's like just they custody it for you.
I get you. Yeah. Okay, that makes sense. Have you ever understood, like, is there like an advantage to that? Is it just the usual, like, for those artists that don't want to custody that art or like take the risk with like a more expensive piece, they'd rather?
It's Nifty Gateway. They do a good job of like making the UI UX like catered towards mainstream. So like you don't need like a MetaMask or ETH in your wallet to like get started in art.
Very interesting. That's another like sort of like hybrid approach there.
Yeah.
Sorry, you were scrolling down there. What was next up?
Yeah, this is like more super rare specific data. I guess we started with crypto and we can maybe dive deeper into super rare, but these are like super rare specific numbers. So you have primary versus secondary, auction versus sales. That's a cumulative graph. Monthly active collectors. Weekly average artwork price. This one's really interesting because you can just see like stuff is getting more expensive on super rare, even in ETH terms, because as bigger artists come on the platform, as like more and more like sophisticated art collector whales like come in, like stuff gets more expensive. And these are just like user numbers.
Yeah, the numbers there that stuck out are like what total artists, total collectors, like total artworks. I mean, these numbers are just they're hockey sticking upwards. I mean, it's just insane to see that. The fact that what is if you scroll up just a little bit, those two charts, weekly average artwork price, that I can attest to. I mean, I have had somewhat of a pulse on what NFT art was costing, and I was like, whoa, like prices have definitely gone up. Like it's difficult to get much of anything under 0.1 ETH if you're on super rare, at least.
Yeah.
If you go to OpenSea, there's a lot more that's listed. Actually, I don't know if it's even on Rarible, but am I right to say like OpenSea is just kind of an aggregator of everything, right?
Yeah. So OpenSea, Rarible, like it's an open platform, so like anyone can any artist can join. Like super rare, it's curated, so like there's an application for artists to join. It's like I think like 300 artists apply a week, and like I think it's like a less than like 5% acceptance rate. So it's a very, very like curated and like pretty difficult to get onto super rare. Which like some people think that's bad. I think it's good because like by keeping it curated, you like keep the quality really high, and like that's really important to collectors where like you don't want to like dilute the brand.
Yeah, and I would point out that thankfully there's other platforms then. Like I do like super rare for the reason that when I go there, like it just, everything is so beautiful and I don't have to sift through like, I don't know, like I don't want to call it lesser quality, just I don't know, stuff that isn't as desirable for my taste. But I love the fact that OpenSea and then Rarible and others are just open, because that to me is it's great. It can support artists who are whatever, still finding like their own style or getting started and building a following. So I think that's really, really great.
Yeah. Yeah.
Let's see, Richard, anything else in terms of art trends that you'd like to point out here? I mean, I feel like we covered a lot here.
I think like one big thing I want to say is like I've been talking to a lot of like my artists, like the artists that I collect from like recently, and like one thing they tell me is that like NFT art like opens a completely different like business model for artists. So like if you're a traditional artist where you sell paintings, like you make monies from like selling the actual like physical item, right? But when you're a digital artist, like you can't sell like the PNG or the JPEG or the MP4. So like before NFTs, like how these artists make money is through commissions, where you have to get corporate clients like Fortune 500 companies like Microsoft, Verizon, and others to commission you to like do an artwork piece for some like upcoming commercial they have. And like that's how you made money. But now like with NFTs and like being able to like tokenize and like sell the actual image itself, that like opens a completely new business model for these artists, where they can make money from both doing the commission stuff as well as like selling the individual pieces, which is like really, really, really exciting for these artists.
Yeah, that's been my understanding. Like having talked to only a few artists, but like really like just thinking a lot about like, wow, like this has created such a liquid market in such a short amount of time for digital art. And again, I would say if you look at the data here, and if you just comb through Super Rare every so often, you'll see these artists who in some cases only have 50 followers or less. There's actually, that's one of the things on Super Rare I'm still surprised by. There's so much activity, but there isn't as many followers to each of the profiles. Like there's people with less than 50 followers, and you can see they're selling pieces within 12 to 24 hours of listing it. So it's pretty cool. I'm excited too with once the Ethereum push notification service goes live, like Super Rare is another example of like you could link your wallet. Their notifications work well, but you have to link an email. And I would be able to link my wallet and get notifications in real time of when pieces get minted. If I get outbid, all the usual confirmations or notifications that they offer.
Yeah.
Cool. Well, Richard, anything else you think folks should know about? I really appreciate this. I feel like we covered a lot.
I think that's about it. Yeah.
There's just so much here to explore.
I just been like I know spending like the last like week just like heads down like coding, like shipping new features. So it's like really exciting just to take a step back and just like look at all this stuff.
Yeah. It's well, actually, I have one more question. You may or may not be able to answer this. Is I recognize people and a lot of other artists, like they'll create a piece, and let's say it has Batman in it, or some Star Wars character like Jabba the Hutt there. I mean, I don't want to like draw attention to this, but like, are there concerns with like licensing rights with, Disney owns all this stuff now. And I mean, that's like a powerhouse in terms of legal power. I have had my concerns, like are any of these artists that are creating something that at least looks like that image? I mean, I guess they could say.
I actually like don't really know the answer to that. That's like, it's a very like intellectual property law question.
Yeah. I could see it going both ways. Like, I mean, art is art, and I mean, like whether something is Batman or looks like Batman, I don't know, but it's a special time. Like, I mean, also too, I think those images, at least if they're similar or it makes you think of whatever you associate with like certain characters, like let's say like a Batman. I think that's part of the reason they're like really special pieces. They're like new takes on Batman. Beeple's got quite a piece on Mickey Mouse. Won't describe what it looks like, but you know which one I'm talking about.
Yeah, that one. Yeah,
that one's
I like how like Beeple has like good takes on like basically like pop culture icons, and like interesting like variations of those.
Yeah, it's really great stuff. And I'd say the key takeaway here is like it's never too late to get into this. I don't want to misrepresent. Like I have always been interested in crypto art just in the last like 6 months. Like I've been paying more attention. Was I buying or collecting anything? No. I just like recently started it, and I'm paying smaller amounts. Like I'm aiming for pieces that are under 0.1 ETH, just because I really am new and I don't really know my way, and I'm just more like exploring it. So like it's never too late to get into this. It's you don't have to, like, if you find pieces that are 50 ether, like, don't be overwhelmed.
Like don't be scared by the whales like on super rare, because like not like just because it's expensive doesn't mean that it's like always good. So
that's right.
That's right. That you can find that aren't going to be like 50 ETH or whatever.
Oh, and one other thing with that, for new users, if you hop into like a super rare, there are people that will collect a piece and they love it. They have no intention of selling it, and they put an absurd price next to it because it's almost like kind of a joke, like, hey, if you want 200 ether, I'll sell you this. Again, like, don't get lost in that, because it's normally like someone, I think, just putting up a fantasy price that like, I love this piece, I have no intention of selling it. But
it's basically to tell them that this is like not for sale, by like listing like $1 million or something for
exactly. Yeah. Well, Richard, thanks so much for joining. Like, great to catch up on all of this. Would love to talk more about this in the future. I think there's just so much more to uncover with crypto art. And then also too, I appreciate the Nexus tracker that you have. Has always been, it's something that I'm able to check and like quickly discern like everything that's happening on Nexus, their insurance.
Yeah, it's been like several people have told me like Nexus tracker has been like a daily routine where like you check it every day.
Yeah, you must have, I was gonna say, you probably have some pretty crazy website visits there. I mean, it's just it's one of those, like, once you start checking it, for better or worse. It's great like when like one of these like analytics sites becomes like a daily routine for like crypto people, like crypto natives, like DeFi Pulse is one, like CoinGecko. It's, you're right. That's it. That DeFi Pulse, this now crypto art, I'm checking more often. I'm like, oh my God, to just focus on work. But well, I want to remind everyone that you can follow Richard at, I think I got it in here.
Richard Chen 39.
Richard Chen 39 on Twitter. Again, you're a partner at One Confirmation, which is one of the notable VCs that focuses on DeFi and Ethereum and all the cool stuff we showed here with NFTs. And you can track all of those art trends at cryptoart.io. So that's really it. And then tomorrow we will be back. We'll have an episode with Melon Protocol and Rari Capital. We're going to talk about how they're working together and what that means. But other than that, thanks so much for joining, Richard. I'm going to hit the outro video. If for any reason, if you hang out for just a minute, have any questions, I'll be there in just a sec. So thanks so much, everyone, for joining. And thank you, Richard.
Awesome. Thanks for having me on.
Bye, everyone.